Hello and welcome to the Trader's Winning Edge software package training video. This is the 8th and for now final video of the basic training series. And in this video we will be building a chart and kind of doing a wrap up. Make sure I want to mention a few things that may not have been covered in the previous videos. And of course, the first thing we need to do is to go over the disclaimer statement. First one is risk disclosure, and just some highlights. Past performance does not guarantee future results. Trading involves substantial risk. Only trade money you can afford to lose. No one can guarantee profits or freedom from loss. The next panel is a U.S. government required disclaimer. Trading has large potential rewards and large potential risks. Don't trade money you can't afford to lose, and past performance is not indicative of future results. Now we have up that all-important CFTC Rule 4.41. Simulated results do not represent actual trading. Simulated trading programs have the benefit of hindsight. And the last one, substantial risk is involved and you must be willing to accept this risk. Again, don't trade money you can't afford to lose, and no offer is being made in this video to buy or sell futures, options, stocks, or ETFs. And I appreciate your patience as we go through this necessary part. Okay, we're back and we've got a crude oil chart. And what I'd like to do as part of this building a chart, really the first decision you will need to make is what time frame chart you want to trade from. And I thought I'd go through these a little bit just to review how this Renko Supreme bar works. So this is a blank chart except for one thing. I've just got the squeeze background showing. And right now that is set for a 50 period moving average. And here, let me just show you. Would be better. So you can see it for your records. Basically, I turned everything off within this, except for the background. So we've got the 50 moving average on both the Bollinger and the Keltner, and always the two standard deviations. And for this, I have a 3 for the Keltner multiplier. So that's what we're looking at. This particular chart happens to be a 15.5. And again, I just want to make sure everybody's clear on these chart designations. So in the data series we go, and here we've got this FT Renko Supreme bar, and it says candle body size and then stair step size. So there's always a bigger and a smaller number. The bigger number refers to the candle body and the smaller number to the stair step. And the candle body simply meaning a candle with no wicks. And in my case, I make the wick white. One of the things I do with these bars is I like to make the wick a white 3-point, and I make the candle outline black. The reason I do that is I like to see a little bit of space, but a lot of people make it white, and I just want to show you that real quick. That's what it looks like if you make the candle body white. And it's actually just the outline. So that is just my own personal preference to make that candle outline black, of course on a black chart. Little easier on my eyes, but do it however you feel like. One thing to keep in mind in choosing these charts, and we're going to go through several of them just to take a look. This is a 15.5. So each one of these candles is 15 ticks, and each step from each little stair step up is 5 ticks. So if you think about entering, say you got a nice signal right there, just for an example, and you wanted to enter a couple ticks beyond that bar and have a stop a tick below that bar. Well, that's 32 ticks, plus 2 plus 1. That's a 33 tick stop. So that's something please keep in mind when you're choosing, what size chart do I want my trigger chart to be? And there's no right or wrong answer. Everybody trades differently. So that's the first one we're looking at. And this is what I call a 3 times chart, because it's a 15.5. So the smaller number times 3 is the bigger number. So it's a 3 times, but it's a 5 step. So we're going to do another example. Now we're going to change this. We're still going to be doing a 3 times, but we're going to change the step size. So we're going to change the step size to 3. Now it's a 3 step, but each candle body with no wick will be 9 ticks. And just before I make this go away, notice the day marker here. This was an entire day. Okay, so now we've got a 9-3 up here, 9-3. So each candle body is exactly 9 ticks. And remember, the reversal bars are either going to be twice that or twice that minus 1 tick. So in this case, 9 times 2 is 18. It's going to be 17 or 18 ticks. And it's just, why it is 17 or 18, I don't know. That has to do with just how the algorithm works. So in this case, if we were to take an entry at this point, what type of a stop would we need? Well, if that is indeed an 18, and it looks like an 18, we'll call it 18, an 18 tick reversal bar. So 2 tick offset is 20 plus 1. That's a 21 tick stop loss. If you want your stop loss to be below that pivot. Not saying that's, doesn't have to be that way, but just to keep this consistent, that's what I'm going to stick with. So this is a 9-3. And notice as we scroll back here where this squeeze is. And the market kind of went all of a sudden and got a little congested here and then pretty quickly broke out. So part of the process is setting this squeeze. And just real good numbers to work with is that 50 period moving average, 2 standard deviations, and a 3. You can vary the 3 a little bit, somewhere in the 3s for that Keltner multiplier. You can experiment with lower numbers. As we go back, notice right here is our day marker. And so a lot more bars to make up a day than the one we saw. So we're going to have more signals on a chart like this. So on to the next example, which is still going to be a 3 times example. We'll do a 6, 2. So 2 times 3 is 6. So it's a 3 times, but now it's a 2 step. And honestly, you do enough of these and they all start to look the same after a while. And there's that fractal nature of the market, but notice how far back, and now I have to scroll somewhere. There it is. There's the day line. So a whole lot more bars in that. And again, you scroll back, kind of look at, does it make sense? And it is nice, here we go, it is nice to find a really range-bound area. And Ninja has a way of stretching everything out, and you kind of bring it down into reality here. On crude oil, one way to do that is just to kind of keep track on the side here. These are 10 tick increments. If you bring it down to where we get 5 ticking, that's even more. So obviously that looks very range bound, but just pay attention here. Each one of these is 20 ticks now. So I do find, just as a good comparison, to keep it in 1 point increments. This is crude oil, so 10 ticks per point. And sure enough, that looks like a range bound area. It just broke out of it, went back into it. very, very range bound looking. So at this point, I'm pretty happy with that squeeze setting in terms of, how are we going to, excuse me, define our range bound area. So I'm going to go roll forward. And the next one we're going to look at is going to be a 2x chart. So we're going to make this number a little bigger, go up to a 10 and a 5. So this is a 5 times 2 is 10, but we're back to that step being 5 ticks. And if we scroll back just a bit, kind of find out how many bars to a day. Whoop, not that many. Okay. And does the squeeze look right to us? Yeah, that looks pretty good right there. That looked pretty range bound right there. Fairly range bound in this area. So again, that setting seems to be holding true. To keep this example going, if we've got a bar like this one, this is a 10 tick bar, so a 20 tick reversal bar. So here we are again, 20, 22, 23 tick stop to trade this on that. So that is the 10-5. And next we're going to go to another 2x chart. And every chart I'm showing you here has its fans. And this one's taking its time. Okay, this is a 6-3. So each little bar with no wick, 6 ticks. Each step is 3 ticks. So if we've got a full reversal bar, so that's 6 times 2 is 12, plus 2 is 14, plus 1, 15. Probably you've heard Jerry talk about a 15 tick stop being a good stop to use in crude oil. So probably why the 6-3 is used a fair amount, but there is no right chart. The chart that we build today, is it going to be the thing to trade and the best chart possible? I highly doubt it. That takes a lot of back testing. But I want to take you through the process of doing that is really what we want to go with here. Okay, and next one we're going to do. So we've looked at these 2 times charts and 3 times charts. Well, then there's a little bit of an oddball in the bunch here. And that is when you make this step a 1. It's not practical to call this a 5 times. Because if we made that step a 2, a 3, a 4, a 5, it's still a 1-step chart. But they all have a very unique, what I call sawtooth appearance. And it's immediately obvious. It will have some different effects in terms of the squeeze settings. That has some trend to it, and yet it calculated in the squeeze. So on a 1-step chart, and you see there's a lot of bars. Looking for other longer squeezes to see. That's a little better. That looks a little more range bound, but with these 1-step charts, it's only 1 tick. So this being a 5, this would be 5 times 2 is 10, 11, 12 if you're 2-tick offset, plus 1, that's a 13-tick stop. And one more just to kind of give you another look. And we'll put a little tiny chart on here. Not suggesting this, but it's going to take a while to calculate. There it goes. This is a 3-1. Now it looks like, my gosh, there's all kinds of movement in this. And there is. Are you gonna make $1 million per each one of these little trades? No, it's only 1 tick per trade, but there are a lot of them. So it depends what you want to do. If you want to be a swing trader, you're going to go to a bigger size chart. If you want to be a scalper, you're going to go to a little size chart. What I'm going to do for the rest of this is we're going to go to kind of a compromise here. And we're going to use a 6-2. So we've looked at this before. One of the things I've noticed with some of these signals is that these 3 times charts, the 6-2 or the 9-3 or the 15-5, they tend to have better looking signals for the signals that we have in this package. And that's just something I have noticed. And so we're gonna start building from here. And as you look, so we scroll through again, and back here we had a nice squeeze section. There it is. That looks right to me. And this is what we're looking for. We're looking for this area. We're in a every 5 ticks. We go to every 10. Bring that down a little bit just until it gets out of that 10 ticks. There it goes. That looks very range bound to me. When we scale it down a little bit like that. So that's just a little trick to doing that, because Ninja will have a way of stretching things out, and you can kind of fool yourself into thinking that, hey, this is a great big tray, that shouldn't be in the squeeze. So, alrighty, on to the next step. Everything is turned off except this background. So if we go to indicators, since we have the squeeze background on, let's go ahead and start with the squeeze signal. And we're going to turn a whole bunch of things on here. And we're going to, this require full candle body beyond line. You can experiment a little bit with that. It doesn't have too much of an influence, but you can experiment with that. I'm going to leave it as is. Show Bollinger Bands, we'll put those on. I personally don't really care for the color Bollinger Bands with slope. Some people love it, and it'll just make it green on an upslope, yellow in a neutral, and red in a downslope. Show Keltner channel, I'm not going to put that on. It can be used for stop placement, by the way. Keep that in mind. So you might want to turn that on. For this demonstration, we won't. Show moving average 1 and 2. Yeah, I like that one. Show squeeze signals. Yeah, we'll show that one. Offset in ticks. I'm going to start with a very, what I would call, liberal number. We're going to see a lot of signals. That -2 refers to as long as it's inside that Bollinger Band and within 2 ticks of the Bollinger Band, we're going to get a signal. Now, if I made it +2, it would say it had to stick its nose 2 ticks outside of the Bollinger Band. But to begin with, I want to see a lot of signals. I want to start to see which ones we like and which ones we don't. Not going to confirm it with anything because I want to see them all. I don't want to limit anything. Maximum bars from start to squeeze, 1,000. We want to see everything. And we're going to confirm it with a Bollinger Band width. No, we just want to see everything. And that's how I'd recommend you start out. So you put these on. So we're not filtering anything right now. And this is the process. So now we have these signals on. And right off the bat, we noticed these didn't work out so good. Well, we had our 200 slope going against them. And okay, that's something to notice. That one didn't work out too good. Okay. So you start to notice some things. Now maybe we're accepting too many of these. Now maybe we want to get a little more requirements in terms of saying, no, I want to see this thing at least touch the Bollinger Band. And believe me, this touch, some of these may appear visually that they touch, but if you set it to 0, they might disappear, they might stay. So just be aware of that. And as we go back, well, geez, we'd like to keep that one. So this is the process, just to notice, how many of these do we really want to be seeing? So first thing let's do is let's just change that -2, which is going to show on a lot of these, make it a 0. So we're saying that it needs to at least touch the Bollinger Band. Okay, that's going to cut down on some of them. And I'm just going to keep scrolling back. And some are going to be better than others, like any other signal. But we did cut back on some. Okay, so we lost some in here. But we said, no, we got to at least hit the Bollinger Band. And this is what I was talking about. That visually looks like it's hitting the Bollinger Band. And let's see if we open it up big. It still looks like we did. But I will tell you, after talking with Rod the programmer, there's many, many, many fine lines that the program picks up in terms of, no, that by definition didn't quite touch it. And it also depends on how thick you make your Bollinger Band line. Now, as we look, some of those are pretty good and some not great. Well, what if we apply a filter with that 200 moving average? Does that clean up anything? Let's take a look at that. So we're going to confirm with MA1 above, below the Bollinger Bands. Let's put that to true. Let's see what that did for us. Now with the 200 between the Bollinger Bands, you're going to get signals both ways. So we got that one. Didn't get that one. It wasn't in a squeeze. Okay, over here, this 200 EMA was beneath both, so it would only take a long signal. It gave us a long signal. Now it slipped in between the Bollinger Bands, and it gave us a short signal. It was in between the Bollinger Bands. But here is a very key thing to keep in mind with these squeeze signals. At some point, you're going to get a signal that doesn't do too good because it breaks out of the squeeze. So tend to think of the first 1, 2, sometimes a long drawn out squeeze, you can get 3 out of it. So that's where we're at with our squeeze signal. Here's our Bollinger Bands being below the 200. Certainly that went past the Bollinger Band, no signal, we filtered it out. That, really great squeeze we got because the Bollingers had the 200 right inside of it. So that's step 1. So we've got something that gives us some possibilities. Doesn't mean we won't change it later. But now let's start to look at the next signal and adding that in. And by the way, nothing says you have to use all 3 signals or any of them for that matter. They're there for you to look at and decide and back test. So now we've got BR signals. One of the things I want to do with the BR signals is because one of our filters is up here in the stop and reverse. So we've got pretty much stock settings up here, but I want to start to show that. So we're going to show the far line. For now, I'm going to leave the near line off because it's not a filter, but I am going to show that little vertical line that crosses. That'll help us decide on how many of these BR signals we want to take. And to begin with, we're not going to show all of them, but I want to show a lot of them. So this filter maximum ticks to the far line. I'm going to make it really big for now because I want to see a lot of signals. And maximum setups per direction, again, I'm going to make that really, really big. And for now, no BRs in the squeeze. No, I want to see everything. So let's go ahead and put these on and see what we got. Now we start to look around in terms of here's our trend direction, and it has the audio, so it gave you a heads up, and there was the first BR signal right there. One word of wisdom with these signals: it's easy to scroll backwards through the chart. It's very dangerous to look at these signals scrolling backwards. You want to make sure you're looking at it from a real time. You would have seen this downtrend started first. Then you would have seen that signal. And so that's the first signal, and that worked out pretty good. Now there's a lot of other signals. Maybe we don't want to have all of these signals. Maybe we do want to consider putting some kind of filter in terms of how close it gets to these dots. So we would have gotten that one, probably that one. Might have dropped off a lot of signals here. Maybe we picked up a couple here. Maybe we picked up that one, depending on that. But one of the things to keep in mind is just to look at, okay, here's the next one. There's the first BR signal. Yeah, it didn't go very far, but could make something on it. That's why we take small targets first. And going back, here is our green line. Uptrend started, or whatever it's going to say. And sure enough, we got a BR signal right there. All of a sudden the BR signals are starting to look pretty good here. It is a trending signal. Keep that in mind. And you can choose how many you want to see. And it's always going to be a red, green, red, green. And we'll see that same thing with the MACD filter. You're not going to have two greens in a row or two reds in a row, ever. So here we got a green. First up signal, did pretty good. Here we got a red down, didn't get any signals. It was very short-lived. That was a little bigger pullback. Okay, now we're here in the squeeze. And I am going to bring this down a little bit. So one of the things we need to decide is, do we want to see these signals when we're in the squeeze? And it's a personal decision, and it does take a lot of looking at these charts to decide that. For now, I'm going to leave them on. Here's this crazy area that we really ought to bring down a little bit. Here we've got our downtrend started, first BR signal. It worked. This is interesting. Got our green line. We didn't get our first signal till way up here. Again, I'll tell you from personal experience, the closer to the line, the better. So here we've got a signal very close to the line. Tended to work out. Here we've got a signal very close to the line. You did have to survive a pullback here, but it worked out. And here is a great example of why we put a filter in. We've got a uptrend started. We pull back. We get our first BR signal here, and then immediately it pulls back right to these dots and gives us just this beautiful, ideal looking signal. Each trader is going to have to make a decision. And that is, are we going to go for the first signal that's real close to that red line, even though sometimes we're probably going to get stopped out and have to get back in again? Or do we say, I think the ones that get into a proximity of those SAR dots have a little higher probability of success? Maybe they do, maybe they don't. Depends what market and chart you're looking at. As we go along, again here the downtrend line way down here, we got a signal. It's just too far. The market impulsed down. That's an impulse move. It couldn't even put a reversal bar in, and it didn't get much of a pullback. Of course, that was all there was. So I don't have a set number for you in terms of, hey, too many bars, because it depends what size chart you're looking at. But that principle is true with all of them. As we go back, here we go again. There's the first signal fairly close to the bar. You start to get an idea. I'm gonna go to a crosshair cursor. Just kind of get an idea of where we're at. Gosh, that's 7 ticks away. That's pretty far away, but geez, that worked out really good. We look around a little bit. Okay, now we're way far away before we get our first one. I guess you could have made a little bit there, but it's kind of far away. Had a nice squeeze signal there, that's for sure. Very much in line with the 200. And again, here we go. We're way up. This is another thing. The reason I do show the Bollinger Band. I don't like to take these signals when they have what I call nowhere to go. They're starting out right at the Bollinger Band, which we've already discussed. Usually 95% of the time it's going to contain price. So sure enough, it pulled back. So I greatly prefer to see a signal starting out, where I'd be entering, somewhat away from that Bollinger Band. So if you look at this one, in this case, just having that rule saying, hey, we've got to get within 3, 4, 5, 6 something ticks of these SAR dots, we had a little better chance to make something. And no down signal at all there, had an up signal. And going along here, had an up signal. And you notice we're not filtering with these dots at all. So depending on how tight a filter you put on, you might not get any signals at all. You're going to need to decide when you're in the squeeze and you get a BR signal that's that counter trend to the 200, do you really want to take that one, or do you want to wait maybe and get a squeeze signal that's going to be with the 200? I think that one might have a better chance. You can see in this chart where we got a quick little downtrend and right back to an uptrend. This is a reset. So way back here we got the uptrend. We got these signals, and again, here's where this little possible filter comes in with these SAR dots. Do we want to jump right in here and try to hang in there? Up to you. But this is a reset. So again, we didn't get a short signal. We've reset. We're into a new condition. First BR signal. After that, here we go. But, we're not doing much filtering. Now, we are filtering. As soon as I say that, I can't find an example. One of the things you're going to be tempted to do, here's an example. Right there, that bar has a wick on it. Well, if we in the software said that we have to be more than one bar from the bar of the opposite color, which is the rule right now. See, this BR signal, it was one bar from the opposite color bar. So if we count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bars away. In other words, it went past that line. We got our up signal. We could, if we chose to, have a BR signal there. And of course, when that's going to get you in trouble is when it goes up 2 or 3 ticks and comes back down to the line, and it doesn't work. Personally, I found that I do better if I just be patient and wait. And here's an example of this filter again. It came right down. So are we going to get a lot fewer trades if we demand that we get in within, say, 3, 4 ticks of those lines? We sure will. Are we going to miss out on some great trades? We sure are. But please keep in mind, if you're in a market that's just moving very well, come down here and it's just moving well, and you've got some monster area of support down here, and you're just convinced this thing is going to take off, and you're listening to Jerry and he's saying it's time to get in, and say, well, I'm going to wait for a signal. Well, if you had this 3-tick offset, you wouldn't get a signal, but you sure had a pullback. No reason you can't get in up here. So, the signals are nice, but don't become, a slave to the signals. So let's do one thing on this BR and see what that looks like. And in this case, maximum ticks to the far line. Let's just make it 4. Now, it's going to make a lot of these BR signals disappear, but a lot of them stay. And this is what I was talking about right here. That just made those disappear. So this is purely a thing through back testing. You're going to decide, do I get enough good trades, and are they a really good value if I demand they get closer to those dots? Again, I can tell you from experience, when you're towards the end of a squeeze and you see these little string of dots lining up next to the Bollinger Band, those are pretty high probability trades. Any time frame, it'll have those examples. But you can see all of a sudden we're scrolling back. We don't see too many BR signals. So maybe we were too, a little too aggressive with that. Wow, we got some nice runs here. Okay. Let's go down. Well, maybe we ought to try 6. Maybe that would be better. But you get the process. So now we have more. And some are better than others. Here's our thing where we've got our little dots right next to the Bollinger Band. Got a BR signal. They tend to do pretty good. Got an SQ signal with both the 600 and the 200. Now we're in a little bit more of an uptrend here. We could have had a BR signal here, and it went. This is a 2-step. So if you got in at 2-tick offset, 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26. That's 26 ticks up here. Well, we didn't get that one because it didn't pull back close enough through this. If you make this SAR setting a smaller number and bring these dots closer and closer and closer and closer, or farther and farther and farther, how do I move my dots closer to that? Well, then if you did that, then it might not even have done this. So there's kind of a sweet spot to all these things. But deciding on this filter for the BR signals with these SAR dots, is a very effective approach, I've found. Certainly that worked out pretty good. Even with that, you'll get a double signal. But you can see we're starting to get some of these signals, and then boy, you look at this and say, wow, that wish I could have gotten in on that with a signal. So it's up to you. If we look at that, 26 down to 15, my golly, that's what, 11 ticks away. Do I really want to do that? If we were to set it to 11 or 12 ticks, we're going to see a lot of signals, but we're going to see a lot more failed signals. So it just depends on how many of these you want to see. So for now, I'm going to leave it like that. And let's go ahead and add our third signal. And I'm just going to scroll all the way back here. Now we're going to put in the ZR signal. So we'll say, yep, we want to see them. And we're going to use some settings that I've been playing around with. We're going to be kind of aggressive to begin with. So instead of an 817, we're going to make it 517. And instead of a 5200, well, we're going to make it a 5089. We want a little quicker action. We will use our filter on the MACDs of 0.02. And for now, I'm going to leave all the EMA filters off because we are using these threshold settings. It's kind of an either or. If you're going to really use the threshold settings and really spend time getting your threshold settings just right, you're probably not going to be using too many of the EMA filters. On the other hand, if you say, I'm not going to use threshold settings at all, I'm going to make it 0. I'm going to filter by the moving averages. That's just a different way to do it. No right or wrong to it, but just be aware of that. So let's take a look here. Show ZR vertical trend lines. Yep, we're going to show that. And you also notice no ZRs and squeeze. You'll have that choice. So let's see what we got here. And now we've got ZRs, and now you notice we've got these magenta or fuchsia colored, and this simply because in the software you can say what color do you want any signals that might be stacked to be. So the standalone BRs are yellow, standalone SQs are white, standalone ZRs cyan, and the stacked signals are magenta or fuchsia. So now we've got the ZRs. And looking at, well, when do they come into play? Well, we got a ZR and a BR. ZR and a BR didn't come into play too much. ZR and an SQ, BR and a ZR. Notice here the settings we've got. We did not get a BR signal in this whole run. But it sure got our attention here. Holy cow. SQ and ZR. So one thing about the stacking of the signals, they're an attention getter. There's a little ZR signal right there. Notice it was too much of a pullback for the BR. Notice for the SAR setting, we got a little, hey, SAR downtrend started. But we're still in an uptrend as far as the ZR is concerned. So you'll see a lot of these ZR signals form right between two SAR trend settings. So two in a row like that. And there's that double signal. So actually we've got something that's somewhat workable, but then you got to make a decision. What am I going to do with this range bound? Do I really want to just get rid of everything? I choose not to. But again, when I see these dots just building and building and building and building and building, and then finally the price pulls back and I get either an SQ or a BR with the dots, generally speaking, we're going to get something out of that. At least what I call a band-to-band trade. So that is a setup. And like I say, is it the end-all be-all? No. All kinds of moving averages you can put on and import them from different time frames. You can filter with those moving averages. But you start to see that some of these signals look pretty doggone good. And it's not a huge long process. This is, as you've noticed, a slightly longer video. And I knew this one would be, but I wanted to spend a little bit of time in terms of building these signals. And as you start to build these, and you're really, it's easy, our eyes are drawn towards the ones that work. What I would encourage you to do when building your chart is start to put an ellipse around the ones that didn't work out so good. And just kind of start going through and noticing, what is there anything about these that didn't work out so good? Were they counter trend to a major moving average? Who knows? Were they in a squeeze? There's always some signals that just were stinkers. Just start to circle the ones that didn't work. It's easy to see the ones. Wow, look at that one. That worked. Well, not that one. This one wasn't too good either. Maybe we do need to do some work on these ZRs. One thing we can decide is just how many do we want to see per any given trend. So that gives you an idea. And notice, I'm just going to put an ellipse right around that. That is our MACD, higher time frame MACD, saying, okay, now we're looking for long signals. So immediately we went into this squeezy type stuff. And we get way over here. So we're way into a lot of ZR signals. And that happens to be, now it's looking for long ones. But look at the relationship. Look at how close that ZR signal is to that MACD downtrend. So very similar to the BR signals, it seems like some of the best ones we saw were real close to the SAR line. Well, this one was real close to the MACD line, so keep that in mind. So, okay, I think I've held you up long enough on this one. Please do experiment with adding some of these higher time frame moving averages. And let me actually go back here. A lot of other filters you can do. You can certainly change the SAR settings. A lot of different things. These signal and warnings. It's kind of tough to demonstrate these. If I do it in Market Replay and try to do it at a little faster pace, you don't hear them. They go too fast. But what you will hear on these is you would hear first, before the BR signal has even formed all the way, so it has not completed, you're going to hear warning BR. So we've said true to BR, and then down here we said, well, I want the chart symbol, so it's going to say warning BR. CL. Let's see down here, signal type. Well, yep, it's going to say BR. And down here, signal direction. Oh, so we might get warning BR CL short, and it hasn't even formed. So that gives you an opportunity to say, hey, everything I see I like about this setup, I'm going to get my order in. Now, if that bar doesn't complete, because it's going to be a reversal bar, if that bar doesn't complete and it just goes the other way, oh, well, you cancel your order. After the signal has formed, you're going to get signal BR CL short. One thing you can do to cut down on the number of signals, particularly if you have multiple charts going. And by the way, you can just say, I don't want any auto warnings. I like them a lot. One thing you can do is just warning sounds only. That cuts down tremendously, because unfortunately in the Ninja sounds on your computer, you can't have two sounds play at once. One is going to step on the other. So whoever got there first, you're going to hear that one. And that's the problem with playing trying to play these on Market Replay, unless you want to sit here for 3 hours to hear some signals. But one little trick to try is just having the warning sounds only. You do not have to have the SAR trend sound. You do not have to have the MACD trend sound. I like it. Nice little heads up for, hey, I'm kind of watching for long trades. I'm watching for short trades. This BR setting, this maximum ticks to the far SAR line. I very much like that. But just be aware when you're setting your chart up, make sure you put this maximum setups to some huge ridiculous number. And just because you want to see everything when you're deciding. Then decide, hey, I only want to see 3 BR signals per direction anyway. But that takes a lot of back testing to arrive at that. So you don't want to set that to a small number and then never know. So start off with lots of signals and then start to pare them down. We stuck with the 50 moving average and the 2 standard deviations. That's a standard. Play around with this Keltner channel multiplier. I prefer this pale goldenrod 15 because it gives me a visible but subtle. It doesn't hit me in the face. It's not obnoxious. We are showing these 2 moving averages from inside the squeeze indicator, and that was in this case the 200 and the 600. If you set that to false, the moving averages will disappear, and you can certainly put regular NinjaTrader moving averages on. But if you think about it, you can put probably all the moving averages you'd ever want to see on between these 2 that are within the squeeze, and then you got 5 more down here. And remember, all of these can be imported from higher time frames, and you can just put the individual MA on that. You can also do a higher time frame. So you can put a million moving averages on your chart if you so desire. Remember, the plots is where you're going to choose all the colors. The color of stacked signal labels, fuchsia. There's the ZR, the SQ, the BR. These color of signal arrow longs, I don't mess with those a whole lot, but looking over here where my cursor is, when a signal forms, you also get this little arrow. And you can choose to make that transparent and not even have it, by the way. But when it's in the process of forming, that signal is going to be, that the little arrow is going to be gray. So it kind of lets you know that, oh, this is not a real signal yet. One of the things that you can also do, I believe, well, maybe, what I'm looking for here is what color is this thing going to be when it's forming. Okay, so there's the warning label. One of the things you might want to consider, notice it's yellow here and the final signal for the BR is yellow. You might want to make this a different color so that you know it's not an official signal until it turns yellow. It didn't close. But quite frankly, you're probably going to put your order in at the warning phase. If you want to make these signals look bigger or smaller, you do it right there. Pretty simple. All kinds of little offsets you can play with. You know, these confirming EMA 1 through 5, that's where you're going to change things. So make sure you check out the plot section. And you know, if you want your SAR lines to look different, and just to show you one of these, the far line in red. So it's going to be the line that's above the price action. And so this is red solid dot 2. So you can choose anything you want here. Make it look any way you want. You're going to put in, you know, what colors do you want for your Keltners. It looks like they're transparent here. By the way, you can default this to a color because up in the squeeze section, you get to choose whether you're going to show the Bollinger Bands or show the Keltner channels. So no need anymore to have those set to transparent to not see them. And so these are all the different colors of things. And of course, we've got the settings for the times. So, okay, folks, I think that's about enough. Hopefully I gave you some things to think about of just going through this process. If I were to continue this process and put a lot more time on my chart and looking around, it would be in the, you know, what number should I pick for that BR filter? And do I want to start to use moving averages to filter some of these ZR signals, this type of thing? Do I want to play around with the threshold settings and put the MACDs on here and look at that? That's just the process. Hope you got something out of that video. I know it's running a little bit long, but this is kind of winding things up, and so I wanted to put it all together so I didn't limit myself in the length of this video. And besides, you can speed it up when you're playing it anyway. So hope you enjoyed it. Take care.